everyone, welcome to Buy Now Sell Now, the weekend edition. This is the show where we answer all of your individual viewer queries and of course get you and your individual portfolios answered by our fundamental expert. I'm Mubina Kapasi and here's all that we have lined up for you today on the show. First up, we'll be answering queries on some names from the auto ancillary space. So we have Mindia Industries as well as Amara Raja Batteries that we will be talking about, and later on the show we'll be discussing Madan Kumar's portfolio. So let's bring on board our experts then who are here to guide us through the next 30 minutes. Mr. G Chokkalingam will be joining us on the fundamentals, and on the technicals we have Amar Singh from Angel Broking. Thank you gentlemen for joining in and helping our viewers out on Buy Now Sell Now weekend. And our very first query today is coming in from Chaitanya, and in fact he's sending in his query all the way from the United States. His question is on Mindia Industries. He says he is a long-term investor. He had bought 50 shares of Mindia Industries at 265 rupees per share, and he wants to know if he must add more at the current levels. Let's pull up the calculator and see what Mindia Industries is doing for him at the current juncture. He's purchased it at about 265 rupees and well, just about making some good money over there on his 50-odd shares that he has purchased. Almost in fact has been able to double his investment, so not bad at all. Mr. Chokkalingam, let's come to you first. Do you think there's more room for an upside from here on?
Maybe marginally. I would suggest that he should consider for every rise to book profit, because all mid-cap stocks have run up like anything. Even Mindia has multiplied from the bottom in the last 2 years, 2 to 3 years. And also, you know, the electric vehicle is coming. There is a lot of uncertainty regarding the auto components due to the threat from the electric vehicles in the long term. So hence, I would suggest him to sell on any significant rise and shift to stock like Cochin Shipyard, which gives a lot of comfort on the valuation. It's a thematic play on defense. A strong balance sheet, a lot of cash on the book. Recently, it has won more than 4,000 crore order, and it's a thematic play because in the last 10 years there has been a lot of development in Indian Ocean in terms of monitoring by India as well as by neighbors, which means there would be demand for more and more naval ships, and this company can meet such requirements. So therefore, I would suggest strongly shifting to Cochin Shipyard.
Okay, so given the run-up that we have seen in Mindia Industries, a very sharp one, Mr. Chokkalingam is advising that you'd rather shift your investment portfolio over to something like a Cochin Shipyard. Amar, let's come to you then. Yes, like Mr. Chokkalingam said, in the last 2 years, we've seen a significant rise come by in Mindia Industries. So the chart patterns at least, look pretty, decent. But the question is there more room for upside from here?
Yeah, what we are seeing in Mindia Industries technically is that on the long-term charts, yes, definitely it remains strong, but from the medium-term perspective, we are seeing some loss of momentum technically on the charts. And since he bought around 260-65, currently the price is around 820-25 levels. So ideally, he should look at booking at least 50% profits on his trade, and rest he can hold on with a stop loss, technical stop loss of 724, because as I said that the long term trend is up, but the long term it's in overbought territory for quite some time, and medium term it's showing some signs of weakness or momentum losing. So that clearly reflects that upside momentum is going to be difficult for the stock to sustain in the medium term. So ideally he should book profits and trail the balance 50% with a stop loss of 724, and if it corrects, then he could maybe look at accumulating again.
Okay, so Amar is essentially advising that you may consider booking partial profits to the extent of 50% of your investment, and he's also in fact mentioned the stop loss on the balance of his investment in Mindia Industries. Our next query as well is coming in from Chaitanya. Once again, he says he has bought 30 shares of Amara Raja Batteries. He's purchased that at about 823 rupees per share. He wants to know if at this level he must buy more or perhaps consider switching to another company. Pull up the calculator for Amara Raja Batteries and you'll see what exactly is he sitting on, a profit or a loss at the current levels. There you have it, about 4,000 rupees or of a loss is what he's making in his investment in Amara Raja Batteries. And once again, this is a company as well that may be a bit susceptible to the entire shift that the auto industry is making in favor of and towards electric vehicles. Amara Raja and the rest of the, the companies in the battery space will have to adapt technologies in favor of perhaps lithium-ion batteries, where the demand will shift going forward in the future. Mr. Chokkalingam, what's your view on Amara Raja?
No, it's a great company, no doubt about it. But my point is that being very conservative, this is a time to swap, the stocks which have already ran up and enjoying IP multiple with, the stocks which have not gone up so substantially, and also they provide attractive valuation comfort. So that is my basic strategy. So from that perspective, I would replace Amara Raja Battery with SML Isuzu. In the last 2.5 years, SML Isuzu has gone up as high as 1,600 rupees. Now it has come down below 1,000. There has been a substantial correction because in July, August, the monthly sales numbers were affected very badly for this company. But in September, it has come back to significant sales level. In September, sequentially, its sales have gone up by more than 70%. And as I said, the stock has corrected a lot. So that gives a lot of comfort. And also being a joint venture of Japanese subsidiary Sumitomo, this company has a lot of potential in terms of getting more and more support from Japanese parent company. It is basically drawing 80% of the sales volume from selling school buses, and we have seen a lot of developments in the some schools in the country, and it calls for more stringent security norms and also the technological facilities inside the bus. And this is being a Japanese JV, I believe it has a potential to come out with better quality standard buses for the school children. And from that perspective also, I suggest strongly shifting from Amara Raja Battery to SML Isuzu.
Okay, that's the view coming in from Mr. Chokkalingam. Perhaps consider switching over to an SML Isuzu. Amar, you have a whole call actually on Amara Raja Batteries. What's your rationale on the charts?
Yeah, overall looking at Amara Raja Batteries, what we are seeing in Amara Raja that technically speaking, be it on monthly charts, on weekly charts, on daily charts, the trend continues to remain bearish. And it has corrected from almost 1120 levels to currently trade around 700 odd or so levels. So clearly reflecting that the overall downtrend persists. But at the same time, if you look at it on a quarterly, because I also looked at the stock on the quarterly charts, and so it has a crucial and major support somewhere close to 620 to 630. That's a very strong support zone for the stock. And since the stock is in oversold territory on daily, weekly and monthly charts, so there is a possibility of a pullback. But we should remember that the stock remains in overall bear mode. So any pullback will be used as a shorting opportunity, or those who are buying at lower levels, they will be booking profits. So the first level to watch out for this stock is somewhere in the region of 740 to 750. That's the first level of resistance. If that level of resistance is taken out, then the stock can move towards 800 levels or so. So my advice would be that he should hold with the stop loss of 620.22 or so, and if the stock gives him an opportunity to exit around 740, 750, that can be an opportunity for him to exit around those levels.
Okay, there you have it. That's Amara Raja Batteries, a fundamental as well as a technical perspective. Chaitanya, I hope we've been able to answer your query on your two stocks. Please do keep sending your queries in. We'll slip into a very short break right here on the show, but when we come back, we'll be discussing Madan Kumar's portfolio. Don't go anywhere. Welcome back. You're tuned right here with us on Buy Now, Sell Now Weekend, and it's that time of the show where we bring on board our portfolio segment. Today, we'll be discussing the 15 stocks that are in the portfolio that belongs to Madan Kumar. He's based in Bengaluru. He's 46 years of age, a long-term investor, and he is saving up for his retirement. Let's run you through what exactly are the 15 stocks that he has in his portfolio. And well, it looks like a mix of lots of large cap stocks sprinkled with a few mid cap names here and there. First up, TCS. He's bought that one at 212.5 rupees, clearly adjusted post the bonus that the company has given in the past many years. He's got about 28 shares of that one. Another 24 shares purchase of Reliance Industries, again post bonus adjustment at 148 rupees. LIC Housing Finance bought at 213 rupees. There's also 100 shares of L&T Finance, another 100 shares of NTPC, which he's purchased at 62, and 70 shares of Power Grid Corporation. Yes Bank purchased at about 158 rupees. He's bought about 250 shares of that one. L&T as well, he's bought it at 498 rupees. Do remember that, of course, all these stocks have been subsequently adjusted for bonus. India Bulls Housing Finance, 100 shares of that stock purchased as well. Cadila Health bought at 246 rupees. 25 shares of HCL Tech, and there's also 100 shares of Coal India. Lastly, more from the banking space, 100 shares of SBI at 220 rupees, 15 shares of Lupin at 961, and 165 shares of ICICI Bank. Well, two things that we can gather from our investor is, firstly, he has been investing his savings for a very long time. All of these prices that you see have been subsequently adjusted for bonus. So kudos, he's been investing for very long. He's been reaping the benefits as well of long-term investing. And interestingly, he has a lot of large cap names in his portfolio. In fact, most of the constituents in his portfolio are all nifty names, barring, of course, just about LIC Housing Finance, L&T Finance, and perhaps even Cadila Health. So it's an interesting portfolio. In fact, very rare portfolio where we get most of the constituents being from the Nifty. Mr. Chokkalingam, let's start off with the first three stocks.
Yeah, before going into portfolio, just one observation on the portfolio. He has got almost 3/4 of the portfolio value in banking and financial. So according to me, this is the time to realign his portfolio. Having such excessive exposure to single sector is quite risky. So having said that, second, I would agree with him. Right now, it is better to have a tilt towards large cap stocks because I am not very confident of the sustainability of the current valuation for the mid cap space. So therefore, accordingly, I am giving the suggestions. He should hold on to all three stocks: Reliance, TCS, and LIC Housing. I believe all these three stocks have upside potential, at least 10-15%, and also it can give a lot of stability to his portfolio. The risk is very low, and particularly LIC Housing, after the correction, it looks very attractive. So I would suggest him to hold all these three stocks.
Okay, there you have it, a whole call coming in for all these three stocks from Mr. Chokkalingam. Next up, L&T Finance, another one from the banking and finance space, 100 shares purchased of that one, and another 100 of NTPC and Power Grid, both from the power utility space. Mr. Chokkalingam, your call.
Yeah, I would suggest him to hold NTPC and also Power Grid. Power Grid, I believe, is still cheaply valued at 10-11 times 1 year forward earning. Even NTPC has not run up, and in terms of price to book value also, it still remains quite attractive. However, I would suggest him to sell L&T Finance. It is trading at substantial premium to book value, and he can replace that with South Indian Bank. It is more than 50% cheaper in terms of price to book value as compared to L&T Finance. As I said earlier, South Indian Bank, I believe, can become a wealth creating stock from this level. So therefore, I would suggest this shift.
Okay, so perhaps consider moving out of L&T Finance and instead replacing that with a South Indian bank in your portfolio. That's the target that Mr. Chokkalingam has, but the other two are, of course, hold. Yes Bank, 250 shares purchased of that one at about 158 rupees. There's also L&T, which he's bought at 498, and India Bulls Housing purchased about 100 shares of that one. Mr. Chokkalingam, what would you do with this?
He should hold on to L&T. In fact, the price stability in oil is also positive for L&T, and L&T has been divesting a lot of unrelated businesses and generating a lot of cash and strengthening the balance sheet. I believe it has got more opportunities because it has also got investments in IT and technology companies. So there is more scope for generating a lot of cash. Therefore, he should hold on to it, and he should also hold on to S Bank. Of course, the valuation is slightly stretched at 3 times price to book value, but still, S Bank is growing at a strong double digit. So in 1 year, this valuation can shrink, so he can hold on to S Bank. As far as India Bull Housing is concerned, I would ask him to sell. As I said earlier, he has got too much exposure to banking and finance. He can replace this with Cochin Shipyard, which I have earlier described.
Okay, yes. Well, clearly the exposure to banking and finance as well is seen very clearly. It's skewed in the favor of that sector. So hence, India Bulls Housing Finance, you may consider replacing that with Cochin Shipyard. And the next three stocks, Kerala from the pharma space. I think, in fact, it's the lone constituent from the pharma space, apart from, of course, even Lupin, which we will talk about later. He's bought 100 shares of that. From the IT space, there's HCL Tech and Coal India. Mr. Chokkalingam, your call.
Yeah, I would suggest him to hold on to Coal India. I firmly believe that Coal India will declare, another special dividend, because the government is in tremendous fiscal stress, and this company is still sitting on a lot of cash. Even this recent wage hike will not be a problem, because I believe they will be able to pass it on by rising the coal prices. And he should hold on to HCL Tech as well. This would give a lot of defensive strategy in his portfolio. And as far as Kerala is concerned, I would suggest him to sell. Kerala hasn't corrected the way other pharma stocks have corrected, but that is not the only reason. The main reason is that if you look at the annual sales enterprise value, the enterprise value is around 5 times annual sales. According to me, that's very costly for the stock. I also believe that there will be a lot of pressure for pharmaceutical industry in terms of price realization, both the domestic market as well as US market. And therefore, I would suggest him to sell Kerala and shift to Balmalari company. As you also mentioned earlier, he has got at least exposure to mid cap, so he can include 1 or 2 good quality mid cap stocks. So apart from Cochin Shipyard, he can include Balmalari company. The stock has corrected nearly 25% from the recent peak, and this is a very strong balance sheet, and it's mainly deriving a lot of profit from logistic business, and its holding company has already informed that ultimately they would divest this company and wind up the holding company. So as and when that happens, this stock can become a multi-bagger. So therefore, I would suggest him to shift from Kerala to Balmalari company.
Okay, so it's perhaps a good idea to book into those profits that you are sitting on. Kerala, remember, it has seen quite a rally in 2017, the only one, in fact, and the biggest gainer in the pharma space. HCL Tech is a hold, and there is another possibility of a bumper dividend to come by from Coal India. So hence, a hold on that one as well. And the last three, once again, more nifty names and more banking names. SBI, 100 shares purchased of that one at 220. Lupin as well features on the list. And ICICI Bank, 165 shares purchased of that stock. Mr. Chokkalingam, what would you do?
Yeah, SBI should hold on, because we have seen unlocking money from SBI Life. It has got a lot more JVs and subsidiaries. There is a lot of possibility of further unlocking for SBI. And also by March quarter, I believe for many PSUs like SBI, the NPA will peak out. So considering these two facts, I would suggest him to hold. As far as Lupin is concerned, yes, this also would be impacted by pressure on the price realization. But the point is that Lupin is one of the few stocks like Sun Pharma, which has been beaten down a lot in the pharmaceutical industry in the last 2 years. So I believe the bidding is more than what it deserves, and it can easily recover from here at least another 12 to 15%. Therefore, I would suggest hold on Lupin. I would suggest sell on ICICI Bank. As I mentioned earlier, you should reduce the exposure to banking and finance, and this you can replace with the ONGC. It doesn't have any oil and gas stock, and not for the sake of having oil and gas, but I believe that ONGC can create a lot of wealth in the next 2 to 3 years. The stock has not participated in the rally, and it is available below its consolidated book value, and it is sitting on a lot of cash, a lot of investments in IOC, GAIL, and acquisition of HPCL also would be positive, because that will give stability to profit and top line as well as bottom line going forward at a consolidated level. And also the oil prices from the 2016 January bottom, they have gone up by more than 85%. That is also positive for ONGC. And the way International Energy Association and American Energy Association keep talking about the tightness of the oil market next year, I am sure ONGC can get a lot of benefit. Therefore, I would suggest him to shift from ICICI Bank to ONGC.
And it's a big newsmaker as well, with all the consolidation that one's talking about in the oil and gas space. So consider selling ICICI Bank, hold on to ONGC, or rather buy into ONGC. That's the target price being recommended. Very interesting portfolio, really. Lots of nifty names, and bought for a very, very long time and kept as a coffee can portfolio. But do remember, all the chops and changes, and this portfolio that has been recommended by Mr. Chokkalingam is a model portfolio. Please do consult your individual investment advisor before taking any investment decisions. We'll slip into yet another very quick commercial break, but when we come back, we'll be talking about the markets and getting you lots more wealth creation and technical recommendations. You're tuned right here on Buy Now, Sell Now Weekend, and let's talk about the markets. They were the cynosure of all eyes in the week gone by because it has certainly been quite a week. We've been able to make fresh record highs for the Nifty, beating the previous level of the record high that was touched only on the 19th of September. We did get a lot of support coming in from the banking space as well, so that was something that was very encouraging. And there you have it on your screens. So finally, on Friday's session, we shut shop at about 10,167. So just a bit shy of the fresh record high levels that we did manage to touch on an intraday basis on Friday's session. And that's, of course, the move that you saw in the week gone by for the Nifty, Sensex, as well as the Nifty Bank. Nifty above 10,000. What are the investment ideas that one can bet on? Amar, first over to you. For those short-term traders, what would you advise?
Yeah, the first stock to look at buying is Tata Steel. Yes, Tata Steel has witnessed a significant rally and the trend remains strong. So any pullback towards 700, 703 can be used as a buying opportunity with a stop loss of 688 and a target of 734. And the second stock to look at is L&T Finance. What we are seeing in L&T Finance is that the stock technically is strong on the charts. Overall, the trend remains positive. So any pullback towards 202, 204 level can be used as a buying opportunity with a stop loss of 197 and a target of 216.
Okay, so there you have it. Those are some picks coming in from from Amar Singh. There's Tata Steel as well as L&T Finance. But for those investors who want to keep their money in equities for the long haul, Mr. Chokkalingam, what are the wealth creation ideas you have for us?
Yeah, two stocks I would recommend. One is a Cochin Shipyard and second South Indian Bank. As I mentioned earlier, I like Cochin Shipyard because I believe that it is a great defense theme. First of all, it is into supplying naval ships. Defense accounts for almost 80% of the total turnover. And within that defense business, it has got shipbuilding as well as repairing. Now, the repairing segment is growing much faster. In the last 3 years, the revenue of repairing segment has almost doubled. And that's a highly profitable business segment. And recently, it has won more than 4,000 crore order. Third, as I said earlier, if you look at India and other neighboring countries, there has been a lot of increase in the activities of monitoring the ocean, down Indian Ocean, which means there would be more and more demand for naval ships by Indian defense sector, and this company is in a better position to supply. Fourth, Cochin Shipyard has got a solid balance sheet. It has got a strong cash, which is more than 55% of the market cap. And also, it has opted for a massive expansion. A few thousands of crores it has lined up for next few years. So, all this would augur well. And I believe that this is a perfect play on defense theme. And two, it will create a solid wealth in the next 2 to 3 years. The second idea is South Indian Bank. Just as a disclosure, personally also we have invested in the stock. A couple of days back, results have come. Apparently, the results look very bad because 96% fall in the year-on-year profit. But according to me, the best way to look at is the the business growth, operating profit growth, and also third, the price to adjusted book value. So on these three parameters, South Indian Bank still looks very robust. Its operating profit as well as business have grown in double digit, which is very rare for many banks other than the large private sector banks. And second, if you look at the price to book value, it is only around 1.6 times. It is one of the cheapest banks in terms of price to adjusted book value. Third, why I am stressing this bank is that I firmly believe that there will be more consolidation in the whole private sector banking space. In the last 20 years, we have seen banks like Bank of Madura, Vaishya Bank, Bank of Rajasthan, Lord Krishna Bank. So many banks were acquired in the last 2 decades. And this process would continue because large private banks, in my view, would find it difficult to grow their credit at 35-40% because the industry credit growth itself is growing in a poor single digit of around 7%. So, to justify the kind of valuation these banks have in terms of price to book value ranging from 4 to 5, it's going to be tough to justify that kind of valuation. Therefore, in my view, some of these banks will be forced to look at acquisition option. And if it happens for any bank within the whole private sector bank, even then South Indian Bank can improve the valuation multiple much beyond 1.6 times now. So, therefore, I consider South Indian Bank as a wealth creating idea.
Okay, so there's Cochin Shipyard, lots of prospects in that one, lots of triggers as well that will work for that stock going forward. And also South Indian Bank that Mr. Chokkalingam likes, that could be a good wealth creator going forward. Gentlemen, thank you so much for joining us on Buy Now, Sell Now Weekend, helping our viewers out with their queries and of course giving us your topics. And thank you viewers for tuning in. This is all that we have for you on this edition of the show. Have a good week.